See you. First up, we've got Nvidia rallying above a key level today and extending a 4-day win streak, up nearly 20% this week. Your trade on that beloved stock.
On that beloved stock, Tyler, I'm going to tell you to buy it cautiously. If you don't own it, you've got to wade into that water. This is the hottest area of the market. As long as the race for AI and this battle to continue to create AI continues, this stock's going to do well. They're still looking for like 40% growth in earnings from this company over the next 5 years. It's gone from 48 times earnings, 2024 earnings, to 34 times next year, and coming down with this large earnings growth. So it's performed beautifully well. It's a cyclical area. It probably has a few years left. But the AI impetus that's driving those earnings, I think, can take this stock higher, even at a $3 trillion market cap.
So if you want to establish a position, this is a dollar cost average in.
I think so. I mean, this is if you have a blank in this space, I would want to have a position. It doesn't have to be a full position, and it has to be in keeping with your investment discipline and philosophy. So it can't be an appropriate risk for your portfolio. Check with your advisor.
All right, let's move on to H&R Block then, Michael, which is actually one of the biggest movers today, up 12%, an all-time high after it topped fiscal fourth quarter earnings estimates. Again, this one, look at the performance of 66% over the past 52 weeks. What are your thoughts?
Well, my thoughts, I wish like hell it had done this when I owned it. I owned it years ago. I could never get this stock. The stock never moved. I ended up selling it where I bought it. The stock has just had a great move. And the rule is to buy low and sell high. So I would sell this one into the strength. More of a fade than a hit the sell button and, break glass and run out of the room. No need to do that. But at 12 times earnings, this thing used to trade at 7 times earnings.
Wow.
And it's going to kind of hover at around 7% earnings growth. So I think longer term it's a sell. I don't see dramatic growth in H&R Block.
And finally, Estee Lauder getting a downgrade from Bank of America today due to consumer headwinds in both China and the U.S. The beauty and skincare brand set to report earnings on Monday. Your trade on Estee Lauder.
PU. I mean, if you look at the chart, this is, sorry, folks at Estee Lauder, but, this stock was $165 a share. It's fallen almost in a straight line down and below $95 a share. Has a little bit of a dividend, 2.77%. I think it's just too high still, and I think it could still go lower. Now, watch them nail earnings on Monday and make me look stupid. But if I can buy Ulta Beauty that Warren Buffett's buying at 14 times, I'm looking at Ulta Beauty instead of this company at 24 times earnings. I just don't get any compelling story here. If you look at when you see Chipotle fall and you see Starbucks rise 20% a day up on Starbucks and you see Chipotle fall 10%, the trader in me always says, oh, I'm going to sell the Starbucks and buy the Chipotle. I want to sell what's moving up and tearing up, and Chipotle, a good company. That's not my recommendation, but those are the way you have to think about it. This one, I don't see a reason to buy.
Final question, Michael, and I ask it because we're friends. Shorts or long pants?
Shorts and flip-flops, Tyler, below the camera. I'm trying to make Mark Haynes proud, okay? I don't have my Cheerios, but Mark Haynes would like me today.
He would indeed.
Here.
It is getting hot in here. Michael Farr, thanks.